Welcome back to another episode of Bear to Bull. And today we have Bitcoin continuing to test our previous support levels. As you can tell here, we come down, then we come up, then we come back down. So we're trying to see if this level holds. The RSI actually is looking for a breakout. As you can kind of tell over here on the daily, we have this pattern where it came down of the lowest low over here in July or September 21st. And then we've had this up, then we had this down, and it hasn't so far broken below this. So we're not sure what's going to happen, but as far as the RSI goes, it's bullish. It looks like it's currently trying to break its previous pattern right here. As you can tell, it's hitting resistance on the RSI. If it does manage to break that, it is possible we can see a larger move up. Now, as far as the momentum is pretty funny because we have it switching from bearish to bullish. So these purple, let me see, there we go. These light purple or light pink candles, or lines I could say, they actually represent the momentum. So when it's light pink, it actually means it's more bearish. When it's dark, it means it's less bearish. And over here, the light blue means it's bullish, and then the dark blue means it's less bullish. So we've been alternating between these two to try and figure out which way we're headed, which way the momentum is. But as far as volatility right now, it looks like we want to go to the upside. So yes, we're in the red right now, but the best times, according to history, are actually shown to be in the red. So if you would have bought somewhere around these areas before the breakout, then you would have made some gains over here. Same thing over here. So if you're in a bearish area, generally that's a better time to buy than when you're in the green, because you have less profits to capture when you're going to the top. Unless you want to trade and you feel comfortable enough doing that, then by all means. But generally for beginners, the red area, which is also not the easiest area to invest in because a lot of people aren't psychologically used to it, tend to be better areas to invest in. Why? Well, the RSI is low generally during these areas. You have this red, you have a move up. You have this red. What happens? You had a move up. You have this red. And what happens when we exited? Then you have a move up. So if we are currently in the red, it might not be such a bad time to buy. But of course, everyone's risk management is different. So something that you could do as well is you can wait for one of two patterns to play out. We are not going to be trading sideways forever. I give it about another week or so. We're either going to have, let me actually zoom in so you guys can see. Let me remove these, hide these indicators. Whoops, wrong one. There we go. So we're either going to have a move that'll break up past the resistance levels over here, or we're either going to come down, break this area really quick, and flush out any hands that have limit sell orders here. So that'll flush out the market and anyone with leverage. So if people are trading like over leveraged, it'll flush them out and then maybe continue to the upside. So as of right now, we're still in bullish territory as long as we're one over this support level currently at 40. And the next support level, which I would still be bullish on as long as we're over this red support level over here, currently around 35K. Personally, I think 38, 36, maybe a wick would be the lowest point before we have a reversal to the upside. However, Bitcoin is a beast and it can do whatever it wants. But I would be extremely bullish once we have a break out of this resistance, then we have a come down, test it as support, and then resume off of that. So we're just gonna have to see how it plays out in the next couple of days. You can trade this market if you wish. Just be careful and manage your risk accordingly. All the other coins are going to follow that pretty much. But something that I do also want to bring up to you guys is one of these charts by TechDev, which is pretty interesting. So in previous cycles back in 2013 and 2014, we actually had a test of the July high. So we had this wick come down, make sure that it holds, and then resume off of that. Same thing in 2017. We had a test of the wick high with this red candle down. We had a wick down there. and then resumed off of that. So we're gonna see, we're currently actually in the process of seeing if that actually holds or not. If it does hold, then we might resume off of it more than likely. We just have to see what happens. It's a lot of stuff going on right now. I believe the government's trying to increase debt, and then there might be a government shutdown. Luckily, last time there was a government shutdown, people actually we had a run because people got afraid. FUD, fear, uncertainty, and doubt are always good for potential opportunities in the market. So if you do detect a lot of fear, it might not be such a bad time to look at technical standpoints. And if any coins or Bitcoin look appetizing, then I would suggest, maybe picking some up might not be a bad idea. In the meantime, we'll keep an eye out to see what goes on in these charts, in these markets, and I'll talk to you guys later. Peace.